Hello, everybody. It's John Browning back with the Building Your Life podcast. Today, I have a special guest with us, and he's been on here at least one time before, right, Eric?
It's been at least one, possibly two.
Possibly two. Yeah.
But
So,
thank you for having me back.
yeah. So, Eric Rosberg, he knows just about anything there is to know about the real estate market, in particular mortgages, and how you can think outside the box when you're thinking about buying that first house, second house, third house, whatever it might be, and how to do it, when to do it. And he's a great consultant, and then he can arrange those mortgages for you as well. And we'll give Eric, we're going to give you a chance to let people know how to contact you a little bit later on.
Okay.
I think there will be some people that will want to do that. We're just going to have a conversation here because I continue to get the question, should I buy? Should I rent? It's the age old question. And then I get the question, well, rates right now, and we're kind of dating the podcast when I say this, rates have been higher than the history. If you look back, say 20 to 15 to 20 years, they're higher than they have been. And I think what was the peak of it, Eric? About 7 point something for a 30
The
year.
the peak was in October, November 2023 was the absolute peak. We had reached the highest the interest rates had gotten in about 31 or 32 years. I forget the exact number. But it was in the low eights for a short period of time.
Hmm.
It's they've come down, they've gone back up. It's a little bit of a yo-yo effect.
And then I get the question, well, hey, we keep hearing that, the rates are coming down. But my mortgage rates, when I go to refinance, hasn't really come down. And we got Fed Chairman Powell. We happen to be recording this on a day it won't publish until later, but it happens to be a day when it's very much expected he's going to reduce rates 25 basis points, or the Federal Open Market Committee, is going to reduce rates 25 basis points. And yet the mortgage rate doesn't come down. And of course, that you and I know, but maybe our listeners don't know that it doesn't necessarily have to do with that, because the 10 year, is it still based off the 10 year for the most part?
It's a combination of the 10-year treasury bonds as well as the mortgage-backed security bonds.
So there's a lot of other factors that impact that 10-year treasury bond that may not correspond to what Fed Chairman Powell and the Federal Open Market Committee is doing. And that's confusing a lot of people that are sort of waiting to either refinance or buy that house or whatever. So we're going to kind of dive into it. Eric, I'm going to let you, nobody can introduce you better than you. So let me let you do that and kind of just dive into a quick conversation about this market and should you buy, should you sell, should you refinance, all that good stuff.
Awesome. Well, thank you, John. Again, my name is Eric Rosberg. I'm currently a mortgage broker, and just to say what that is, there's mortgage brokers and direct lenders. As a mortgage broker, I use multiple different lenders to shop for different programs and rates. So a little bit about my background, originally from New England, and I know it's going to be dated, but from Vermont, and Vermont Catamounts just won the NCAA men's soccer. So all us Vermonters are riding high on that. I've been in Florida for almost 8 years. Live in Jupiter, Florida. I have 22 or 23 years of sales experience. Pretty much all of it is based around finance at some level. I actually worked for a investment company while I was in college. Really enjoy it's weird. My wife thinks I'm crazy because I enjoy the numbers and definitely in the mortgage space, which I've been in for about 8 years. It's putting the puzzle pieces together, thinking outside the box,
Hmm.
um, and really serving people with solutions of home ownership. So that's a little bit about me. I am in South Florida. I'm just a little bit north of John. I live in Jupiter, Florida, with my wife and three stepsons.
Yep. And you and I have that in common. We like to put the puzzle pieces together, and part of many people's financial plan is that mortgage piece and or that real estate piece, and whether or not they're when you look at their overall portfolio and financial picture, does a mortgage make sense? Does a mortgage make sense at a certain level? Does it make sense to own, or does it make sense to rent? And then in the middle of all that, which we're going to get into in a little bit, is okay, logically and financially, if you have a if you are fairly certain, you're never 100% certain, but if you're fairly certain you're going to live in a house for say 5 years, and you like the idea of being able to do what you want with the house, you redecorate or remodel or whatever, you're probably in a pretty good financial position to go ahead and buy that house. However, if it's you're a little concerned that maybe you wouldn't stay there that long, it might be a different story, but we'll get into that a little bit later. Is that
So yeah,
yeah,
yeah, and that's good. And everybody's scenario, I'm not going to say situation, scenario is a little bit different.
that's right.
If you're renting and you have a whole house and you're paying $500 a month and you're able to take excess, or depending on what the rent is, let's say the rent average is 2,500 in your area, you're able to work with John and leverage that. Sometimes renting in those one-off cases may be a little bit better solution to leverage your money for the future. Um, so John, you and I had chatted a little bit earlier, and you get asked. I know your clients ask, and I get asked on a daily basis: Is now a good time to? When's the best time to buy?
Right.
And there's not one clear-cut answer. Some people will say the best time to buy was 5 years ago. And the second best time to buy is today. A lot of it really depends on each person's individual circumstances. In addition to that, it's your goals too. Sometimes
Right.
I've worked with people who, let's say you are, you're going to be. I worked with a coach for a local college, and they ended up continuing to rent because they knew they every 2 years his plan was every 1 to 2 years he was going to switch to coach at a different college.
Yeah.
So we kind of ran some numbers. We talked about maybe you want to buy something buy it now as a primary and keep it as an investment property. So we looked at everything. And they decided at the time that for them it was because they were massively unsure. They could have moved in 6 months. It was a really,
Mm.
but in general, I would say if somebody is currently renting, if you're currently renting and you have the means and the ability to purchase, there is a strong argument financially that purchasing is going to be better for in financially. Then there's the other side. There's the other side, and I ask this question to a lot of people that I say, hey, in the last 3 or 4 years, has your rent increased? Right.
Right.
And I'm yet to find somebody that said it's gone down. I've talked to a couple that said, hey, listen, I'm friends with the landlord. It's family, I'm renting from family, and they haven't raised it. But in general, we've seen an increase in rents, which a lot of times don't have control over. 2 or 3 years ago, it was, I mean, once a week I would get a phone call. I got to move. My rent went up 40%.
Right.
My rent went up $1,000 a month, and I got to buy. Or I want to get what I want my options. I don't want to say they said they had to buy. There's you had mentioned that today's Fed day. They will be reducing they're going to do a 25 basis point drop today. So it's been announced. When it comes to the Fed, what they're doing, that's more on short term. It does correlate eventually to the 10-year Treasury bond and mortgage-backed securities, which has a trickle-down effect into hypothetically lowering mortgage rates. Although a couple months ago we saw them lower at double that at 50 basis points, and the next day the interest for the next like 34 days the interest rates went up.
for mortgage. Yeah.
So there's multiple factors. The Fed is planning on 4 rate cuts in 2025. We don't know exactly what it is. That could change.
Could change.
I'm pretty confident that will happen in 2025. Um, but
Yeah, I think one of the misconceptions that even the newscasters have when, and yes, the Fed chairs come out and speak, and they say, some esoteric thing like, well, we may have to slow down at some point. Yeah, and then the market gets all excited. But what the Fed actually does, and they'll tell you this, they're very vocal about it, but then the newscasters get on and make it something that it's not, is the Fed does not move based on expectations. They move based on past data. And right now, the past data still says, you know what, they're still on their trajectory to cut those rates. But again,
yeah,
it doesn't always correlate right away to those mortgage rates.
I'll give kudos to Mr. Barry Habib from MBS Highway, one of the best. He's won every award for forecasting, and I get a lot of information from him, and we'll be sharing some of his information. But he says it the best. The Fed is like getting on 95 and driving, looking in your rearview mirror.
Yep.
They're making decisions based on the past, and a lot of the stuff that they're basing the decisions on has lagging indicators like shelter cost. How much does it cost? They're looking at sometimes 6 to 12 month old data to make current decisions.
Yep. Right.
But you had also mentioned something that and I like to consider myself an advisor. Some of the most important advice I think I give is to turn off and it doesn't matter what news channel.
That's
What
right.
news channel? I will say there is. I'm not going to say her name, but she's on a big mainstream media, and since 2012, her advice since 2012, she has said, "Do not buy. The market's going to crash. Don't buy." And there's people who have listened to her and will continue to listen to her. So what are the advice I say? Turn on the news in general is creates fear, creates some anxiety. And one of the things we had before we went live that we talked about is where do we think the market's going? Is there going to be a crash? Right.
Right.
And when we talk about market crashes, other than everybody looks back at in 2007, 2008, that was the worst housing in 64, 65 years worth of recorded information. That was the worst housing crisis that we went through. And there was the lending guidelines were not the same.
Yep.
Inventory levels, meaning how much supply, was much higher than it is even today. There was a massive amount of supply. Builders were just continued to build houses because if you had a heartbeat and you could sign your name, it was literally almost that easy to get a mortgage. And we had people who owned The Big Short, the movie The Big Short. They had 3, 4, 5, 6 properties that people weren't even living there. They were just vacant properties because it was easily attainable.
Yep.
Since then, got mortgage guidelines. If anybody has applied for a mortgage, doesn't have to be painful, but sometimes it
is.
sometimes it seems painful, especially if you did your last mortgage in the early 2000s and you say, "Hey, Eric, the last time I did a mortgage, I didn't need to provide pay stubs and W-2s or tax returns or bank statements, or they didn't. Things have changed, and that's all to protect. That's to protect you as a home buyer. But as we had talked about, there's a lot of the market's going to crash. The sky is falling. Chicken Little, right? The sky is falling. And when we take a step back, and this information, this data that we're about to talk about was literally today's the 18th, was literally released this morning.
Yeah, pop that up. For those of you who are listening, and not able to in your cars or whatever, go back to our YouTube page. It's if you look up at the at sign Guardian Rock Wealth, you'll find us on YouTube because he's just sharing some data here on a chart, and you can see that on the video portion of the podcast here. But go ahead, Eric.
Awesome. Awesome. So yeah, so let me explain. So for those of you who can't see it, what I want to start with is what's called supply, basic economics, supply and demand. So when we look at supply, we have to look at what's going to be coming on the market. And we're talking about houses. We're talking about single family houses and multifamily houses. So there's a couple indicators of what is going to be built. That's permits. How many house permits are issued? Now, just because a house permit is issued doesn't mean that that property is going to be built. So year over year, this data came out this morning, we're up 4.7%, but a majority of that is multifamily properties. And this is it is an important takeaway. This is national data. This is so we're looking at a big data source. Single families is down. So there's permits for future home builds is about 1.5 million. Within 2024, there's been 1.29 million homes started. So those are big numbers. Again, we're talking nationally. However, the total starts is down year over year since 2023. We're down almost 15% total. So now we have these data points. What does that mean? Okay, we've talked about supply. It's also really important to note that this doesn't mean it's all new houses, John. Some of these permits, and we've seen it here unfortunately in South Florida and the Carolinas, where we had the natural disasters, right? We had the hurricanes come through, and I know you and I pray for those people, but some of these permits are to rebuild houses in that case, or somebody comes in and buys a house that needs to be completely torn down and rebuilt. So it's not a new house formation. So that averages about 100,000. So total starts, it will still stay high. It's about 1.2 million total, and that's between multifamilies and single families. When we look at, I'm going to share another, maybe I'm going to share another slide.
And essentially so tell me if I'm wrong here, is number one, multifamily is gaining in popularity, and this is speculation here, but frankly, multifamily is going to be somewhat cheaper than a single family home. So I think we're seeing a bit of a trend that direction, and I believe that the reason for that is the fact that home prices as a percentage of income that is currently coming into people's pockets has gone up significantly over the past 10-15 years. Would you say that's accurate, or do I have wrong?
That is accurate. I think that data is coming out. Comes off an ADP report,
Right.
which ADP is the biggest payroll company in the United States. And, I think it's tough for us to say, because it's with the inflation, it's still, yes, income levels are up. We talk about how far that dollar will go. I know you and I have that conversation all the time, but in general, wages, and I know this may rub people the wrong way, they may not, but in general, when we look at ADP numbers, wages have increased substantially. Wages versus buying power are two separate things, but wages have gone up. Speaking into the multifamilies, and you've joined me before. I do first time home buyer webinars and some other webinars, and it's a great hack for somebody to buy a multifamily as their primary. Let's say it's four units and they live in
Hmm.
one and they rent out. And then a year later, they can do the same thing. You can keep doing that. In general, multifamilies are, again, I'm using generalizations, are
Generalizations.
going to investors. So some of these multifamilies that are going to investors, let's say it's a four unit, that's four rental. That's four rental units. Even if you buy it as a primary, you have three rental units. Um,
Right.
so it now what is so now we talk about supply. When we talk about demand, how many people, because these sound like really big numbers, John.
Right.
1.3, you're building 1.3 million and you've permitted for 1.5 million. That's a lot of houses,
Yeah.
right? We should be able to house everybody. The number currently is hovering right around, and I'm trying to find, it's okay if I don't find it. It's right around for what's called household formations. A household formation, not building a house, but a household formation is we have two parents and we have a child. The child moves out and becomes and gets to of age and goes from renting. Now that child is buying their first house. That is a new household formation. So I had mentioned something earlier, like the level of inventory, it was higher in 2006, 7, and 8 than it currently is. The population of the United States has also dramatically increased since then. So currently we're hovering right around 1.9 million new household formations annually. So if we've built 1.2 new houses, there's a deficit there. Even if all the permits come to fruition, the data
They
that came
won't.
out today, there's 1.5 going to be built each year. There's roughly 1 point, and as the population grows, and we look at birth rates per year, we project back 33, 34, 35 years in birth rates because we know that that demographic is going to slowly, that's when they're going to start becoming household formations. That's the demand. So currently, when we look at supply, starts and permits, we have a shortage.
Which means
Yeah.
that prices are likely to continue to rise, probably faster than your typical inflation would, just because this sector of the market is, we've got demand likely to outstrip supply. But economics 101, as you mentioned, which would then argue from a purely
Mhm.
economic perspective that purchasing a home would be the right decision, even though, as we talked about before, it's not always about. And I talk to people all the time about this, even as they're building their portfolios. Are you building your best life? Because some people don't want to deal with the taxes, the insurance, the maintenance, and anything else, and they really don't mind maybe not being able to remodel their kitchen or whatever. And that ability psychologically and to build their best life may say that doesn't matter, I'd rather put my money in the market. And the only other thing against purchasing a home, right, is that you can't take the home down to the grocery store and buy a loaf of bread. It's not particularly liquid. It's not that you can't sell it, but there is a transaction cost that is not terribly cheap because there's a lot of people that have to be involved, lawyers, real estate agents, yourself, all that. So keep those things in mind, but over a, say, a 5 year period throughout history, and history is not a guarantee of future results, but throughout history, through any 5 year period, you would have been essentially, just to keep it real simple, ahead of the game to do a purchase. Am I correct on that?
Correct. So even if you bought in 2006 at the peak, right before the prices were as high as they were ever going to get,
Great
and you were
illustration.
what, it's were you underwater? There's different terminologies, but you owed more than what the house was really worth, right? If you held on to that house, by the end of 2012, 2013, you had equity again. And I saw this in 2020, at the end of 2020, 2021, where we had the quantitative easing and interest rates were extremely low and people were doing refinances. And I worked with people who had bought their house in the early to mid 2000s. So they lived through the worst market crash for the housing industry, and the amount of equity they had with low taxes, and it was incredible.
Yeah.
And some of those people were taking money out, they were buying second homes, but it's not a real estate is unless you are a contractor and you can do a fix and flip yourself and put in the sweat equity, it's in
And
general.
even then, some of those guys get in trouble, right?
Even then, and there's listen, for anybody who is a real estate investor, there's ways to do it. You do it a couple times. It's not the get rich quick usually that you may see on a TikTok reel, or
Yeah.
it's a business and you have to make some wise decisions. But
Well,
in general,
let's put it this way. Sorry to interrupt. If you want to do the fix and flip and you think, I'm pretty handy and everything else, please reach out. How's the best way to get in touch with you, Eric? Please reach out. Just talk to this guy because he can guide you and give you some tips as to how to not get yourself in trouble. What's the best way to contact you, Eric?
the best way, I still have my New Hampshire personal phone, but my personal cell is the best. It's 603 817-6004. It's Eric Rosberg, Rosberg. You can look me up on, like, literally Google search will find me. You can look at my reviews and see I'm a real person.
Mm-hmm.
You
He's a real person.
even
I
though
can vouch for him.
this isn't AI. But in general, John, real estate I think it's a long term investment. The Federal Reserve did a study. I don't have the chart here, but it was when you look at renting versus owning over about a decade, a 10-year period, not about a decade, the net worth of somebody who owns is, and this can be done on a Google search. Don't just take my word for it. Is 40 times homeowner will have 40 times more wealth than a renter.
Yeah.
And that's and let's to shoot straight. Not everybody's goal is to become wealthy. That's not.
And not everybody's goal is to have that big of a portion of their portfolio or asset mix in real estate. But what it does psychologically, in my experience, is that it's a forced savings vehicle that
Mhm.
you no longer think about. You're paying your mortgage. You have to pay your mortgage. It's the rent payment. And you do it in a disciplined manner over years and years and years on an appreciating asset. And on top of that, you call Eric here and you leverage it.
Yes.
So you've got a mortgage on that, which, by the way, is not just leverage, but you can still write off some of that, if not
Mhm.
all of that, interest on your taxes. So it's like a double leverage. It's actually some really great things there. And let me just mention one other thing, because we do want to talk about thinking outside the box, because that's what we do here on the Building Your Life podcast. I said you can't take it down to the store and buy bread with it, and that's true. There are other ways, once you have equity built up in your home, that you can access carefully and only with the help of a financial professional, because this is not investment advice, no personal advice on this podcast. There are ways to extract some of that cash out to do with what you want. Now, please don't go buy a depreciating asset. Don't go buy a boat. Don't go buy a car with your home equity. That's not a great use of that cash, but there are other things that you can do. Or if there is an emergency situation, there are other things that you can do to extract some of the equity in in that part of your portfolio we call real estate, right?
Correct. Although I'm a car guy and a boat guy, like
Yes, I
I
know
can
you are.
the the fun side of me says I could
I could
justify
justify
or,
that.
or that 911 Turbo S that's coming out in 2 years. That's going to be at 1.70 to 60. Uh,
Yeah,
but
you need
no,
one of
that's
those.
yeah, gotta have that.
Yeah, that's a need. That's what I don't want.
So there's no, but you're right. There is ways to leverage is one of my favorite words.
Hmm.
Leverage. How do you leverage the home? And leverage can be used if you're renting too. If you have an ultra low rent, if you still live with your parents and you're able to talk to John and leverage that surplus somewhere where it's going to leverage, it's going to compound. As Albert Einstein says, the compounding interest is the eighth wonder of the world.
That's right. Yeah.
So,
And it still exists because not all the seven wonders of the world still exist. A lot of people don't know that. But the eighth wonder of the world, which is compound interest, still exists. And make sure it's working for you and not against you. And, in this kind of consumeristic world that we live in, and I know I'm going to sound like a grandpa right now, but that's what tends to happen is, you buy that couch or that whatever it is that you bought on credit, and suddenly a couple of years later you haven't paid that off, and you realize you've just paid double. Oh, I bought it on sale, but you put it on credit, and then you ended up paying double for whatever it was. And that's why it really worries me, the popularity of this buy now pay later thing. A lot of people tend to forget about that.
mhm.
And it's interest free. Well, it's only interest free for about 6 months, and then they hit you with all of the interest from the past plus going forward at an extremely high rate. So leverage can go both ways. Make sure it's like fire, right? You can use it to keep yourself warm, you can use it to cook. It's not bad in and of itself, just like almost nothing is bad in and of itself. However, when used incorrectly, it can really hurt you. It can destroy you.
Yeah,
So,
I'll add one thing because you just touched upon that. There's a lot of people who have very low interest rates on their house, but I haven't even looked at what the credit card debt. It's like 1.5 trillion or something like that.
it
We're at a
is
massive level of
1.7. Just
credit.
get 1.7 trillion. Yeah.
1.7 trillion. The average car payment is over $750. 30%, roughly 30% of the auto payments are over $1,000. So if you're someone and this is resonating with you, like you're like, oh, that's me, and you have a house and you have equity, I always look at something called it's called a blended rate, and we calculate here's the current interest.
That's right. Yeah.
And there are ways to, again, not advice here. I would suggest, I love conversations, John. I love when somebody reaches out and says, "Hey, this is what I'm working with. How can we solve this? What's the solution to all of this debt? What's the solution to getting me into a house in 2 weeks or 2 years, whatever that looks like?" But that blended rate calculator is very eye-opening because let's say you have a 3% interest rate on your house, but you have 20-25% rate on a big portion of debt. What are you really paying in interest monthly?
Yeah. Yeah. And what people don't realize too, I think, is of late, over the past couple of years, those interest rates on the credit card, they don't stay the same as when you took the credit card out. They go up. And the average credit card rate right now is hovering just below 30%. Think about that for just a second. You're taking out a loan at 30%. In 3 years, you've paid double for
Yeah,
that. And by the way, whatever you bought is probably long gone.
correct.
So always something that we want to consider. And I love the fact that you do that for people, not just concentrating on just the one thing that you do, which is the mortgage and all that, but putting the puzzle piece together, solving the money problem, solving the housing problem, and really doing a full plan for them. And I always appreciate when you give me a call And so I can help people when they're either selling or when they really need just a little bit more financial advice into how to build their best life with potentially a new home in their life, and how are they going to balance those payments. So, and whenever you move into a new house, you want to change something, right? So you spend some money.
Mhm.
Always, I'm going to say always on that one. You're going to put in a new, new carpet, or you're at least going to paint it or something, and that costs you some money too. And thinking through all those things, Eric is not one of those mortgage brokers that just doesn't mention anything. He just does the mortgage and that's it. He'll talk to you about that, and it's good to make sure that you're thinking through all those things and planning for them in advance.
100%.
Yeah. And we're going to run out of time here, Eric, but I'm going to have you on again here within the next few months, because you just got a wealth of knowledge on this topic and some other topics out there as well. But again, best way to contact you is the six.
So 603-817-6004.
Right.
It's my personal cell phone. You can text me, you can call me. As John will, just Sunday mornings is going to be a little bit difficult because we're at church.
All right.
But other than that, and that's a great way we can schedule right from there, schedule an appointment so I can honor your time and make sure I'm 100% focused on what we want to talk about. And so,
Making it the best call of your day that day, and
yeah, and
most valuable
it's
call.
I like to preface it. The first thing out of my mouth isn't going to be asking for a social security number and pull your credit and
That's
find
right.
out find out what your blood type is, right? It's a conversation. It's a goal-based conversation, um, where we're going to talk about a lot of things, and that's all it is to start with, and then we put a plan together.
Yeah, and that's the way we work at Guardian Rock Wealth too. It's like when you reach out to Guardian Rock Wealth, we assume that it's just for information, and that's all that it ever is. Never do we, try and sell you something or something like that. If we can provide some value, and then if it does look like it would be a good idea on your part to have a relationship with us, and only if for me, it's only if it's a long-term relationship, then yeah, we can talk about that. But that first phone call is just to find out some information, provide you with some value, some things from our experience. Eric's got 20 plus years, two plus decades of experience in the industry. I've got 3+ decades in the wealth management industry. We just want to see what we can do to help, or who we can introduce you to that might be able to help you. But the best way to contact
Absolutely.
me, if you are long-term listeners of the Building Your Life podcast, guardianrockwealth.com, in the contact us section. Also, lots of free information out there, folks. Or text the word life. So grab your cell phone, 321-421-5213. Text the word life to that. You're going to get links to all of my information, including directly to my calendar. And it will be me that you talk to, not a member of my staff or anyone else. Our first conversation should be with me in particular. So, Eric, thanks so much for being on the call. It's so awesome when I get people with this kind of experience, because I really like dealing with and working with people with long experience in their fields, because they tend to understand that I've got long experience in my field and it's just an easier conversation. So I really appreciate you taking the time today.
I appreciate your time and having me on. It's always a pleasure.
All right. Until next time, we'll see you later.